Welcome to the DeFinity Market Strategy. I'm Paul Rodriguez of ThinkTrading.com, and I'm here with Manu Choudhary, who's the CEO of DMA Link and the co-founder of DeFinity. How's it going this week, Manu?
Hey, Paul, not too bad. How are things with you?
Yeah, very good. So what's your take on the Russian situation in the markets and obviously Bitcoin and the cryptocurrencies?
Yeah, so look, I think this is really an interesting point in time. We obviously have next week the FOMC meeting, and we will see whether the Fed will be aggressive enough to stick in 50 basis points to 25, as we kind of discussed last week. The feeling is that it's probably going to be 25, and then we have probably another 6 weeks to wait thereafter until we get a bit more clarity. I mean, they're going to talk about their timeline for hiking, but the reality is that the impact that we're seeing already of this war and the consequences, obviously, of 2 years of Corona crisis mean that the economy is in a challenging position. CPI came out yesterday at 7.9, just under 8%, 7.9%, which is interesting. If you go to shadowstats.com, you can actually look at the real numbers, which are closer now to 20% in the United States, and these are absolutely insane levels of inflation for a developed economy. So I think it's a difficult decision, but I think what this means from an interest rate perspective is really that there will probably be a cessation after this hike. That'll be it, and we'll probably see them come back and say, look, in the interest of supporting our economy, in the interest of maintaining the rather tepid growth we've seen so far, and trying to get back to an even keel from economic growth perspective, we will be adding additional capital to the economy, i.e. printing more money, at which point crypto will explode. And I think in terms of the situation with Russia and Ukraine, look, there's two scenarios. I'm still hoping that the first scenario, which is there will be some kind of peace, is the one that actually unfolds. Obviously, on the back of that, there'll be a huge release rally. And we'll see, again, digital assets go absolutely parabolic. The second scenario, which I fear is unfortunately probably more likely, given that there are so many out there that are pushing for this war to continue. I mean, I noticed that we as a country, the United Kingdom, instead of sending our best negotiators, we've sent weapons. So, do we want peace? I don't know. It doesn't sound like Boris does. I sure as hell do, and I'm sure the people of Ukraine do, and I'm sure the people of Russia do as well. But I think if this continues as is, what's going to happen is eventually there'll come a point of inflection where I think you will get some form of fatigue, much like you did with the Corona crisis after the first couple of months, where there was only so much fear that the public could be in about this scenario. At that point, things will not necessarily return to normal, but you'll see people look at things through a different lens. And I think either way, so either we have peace and we see a recovery, or we just have fatigue of the current situation and we see a rally. Either way, there's a huge excuse, I think, for pretty much every central bank to go out there and be more accommodating in their monetary policy, and certainly begin to probably inflate their own balance sheet by printing more money. Which one it will be, I don't know. I'm hoping it's the former, but I suspect it probably will be the latter. And again, last week was a continuation of the theme that we saw the week before, which was additional restrictions on Russia, this time by corporations. And we've had the good wholesome folk at McDonald's shut down all 790 of their restaurants in Russia. So I don't know that that's a bad thing. They're punishing the Russian people by not letting them eat crap food. Okay, I'm not quite sure I get that. So we'll have healthier Russians on the back of this move. Interestingly, also, and this is quite worrying, what we saw essentially Visa and MasterCard essentially pretty much overnight shut down their operations. MasterCard was actually quite nasty in the way they did it. They basically shut down everything, so you couldn't use MasterCard at all. Visa was slightly better, and what they basically did was if you had a Visa issued in the Russian Federation, you could use it domestically. You just can't use it overseas. Those with MasterCards, how the hell do you pay for your tube fare in the morning? How do you get to work? It's a huge amount of pain and discomfort. Quite frankly, a demographic of people that have had nothing to do with this war. If you want to punish the people that are responsible, punish the government. Don't punish the innocent people.
Yeah.
So again, this is kind of not a great thing. I think from memory, there's like 120, 130 corporations that have followed suit and either withdrawn their products or stopped servicing the Russian Federation. One thing that's really interesting that's come out of this is I've noticed that certainly in the last week, we've seen that a lot of the decentralized apps or the dApps that exist, so for instance, Web3 wallets like MetaMask, are a hell of a lot more centralized than certainly I thought. So you saw a lot of MetaMask users in Venezuela being shut out because again, one of their sub developers essentially started using geotagging and apparently accidentally blocked all Venezuelan users. And effectively, what they've done is they've stopped them actually using MetaMask, which is supposed to be fully decentralized, but obviously it's not. So these tell you the pinch points that exist within this decentralized ecosystem. For instance, things like MetaMask that are certainly a hell of a lot more centralized than I thought they were.
It's good to know that sooner rather than later, for sure.
Yeah, no, absolutely. And again, what's interesting is that we had a huge amount of pressure on some of the centralized exchanges. Basically, Jesse Powell, who's the CEO and co-founder of Kraken, came out and said that essentially he would not be falling for the political pressure to essentially stop Russian citizens from transacting on Kraken. And he wouldn't do so until it was made law. So again, I think he's got the same view as me. It makes no sense to punish a whole bunch of innocent people for the wrongdoings of their leaders. But yeah, look, I mean, the situation is very fluid. There's a emergency UN meeting that's been called today, and Russia have called for this to happen, to raise a couple of issues around apparently biolabs found in Ukraine. And honestly, you cannot make this shit up in terms of the twists and turns that we seem to be seeing, certainly with this scenario unfolding.
Did Janet Yellen say something of interest with regard to Bitcoin?
She did. So there was an executive order that the sleepy Joe Biden passed. I'm probably in the sleep. Basically, Janet Yellen decided in her infinite wisdom to kind of publish bits and pieces of this on the Treasury webpage before it was actually publicly announced. But effectively, It seems like it's pretty pro crypto. It seems as though it's quite supportive of the industry, and it kind of makes sense. This is the time, if governments are smart, where you can really dominate the market. So much like Bill Clinton in the mid 90s, decided to offer huge incentives and tax breaks for all those that were doing business on the internet. Well, guess what happens? The United States dominates the internet. So likewise, this is a very smart move, I think, in terms of having some kind of regulation in terms of digital assets, but not being so prohibitive that you make everyone disappear into Europe or Canada. Again, I think we need to wait for the finer details of what this actually means, but I think it is quite positive. And again, what it does is it legitimizes digital assets, which, quite frankly, by the way the mainstream media have been painting digital assets the last couple of years, they've been certainly demonized by them. I think this will do a lot to undo that damage. And likewise, we had the UAE, what was it, the day before yesterday, pass a new virtual asset law, basically, that regulated digital assets, so cryptocurrencies, utility tokens, and NFTs. And again, what this does is look, on the one hand, I'm not a huge fan necessarily of regulation, but I guess what this does do is it legitimizes the digital asset space. And I guess it makes it more accessible to a whole bunch of banks that were sitting on the sidelines waiting for some form of green light by government. And they've certainly got that from the government of UAE, and to a lesser extent from the government of the United States.
Great. So shall we have a look at the charts, see what's going on technically? Brilliant. Okay, thank you for that. That's a really very interesting take on everything. And so if we start off with, I think the main story going forward is obviously what's the next big move for the US dollar, and will it continue to be a safe haven? It's hit some long-term targets for us, just below 100. So that was an extended target. And to be fair, it still looks like it wants to go higher, which is a bit of a surprise, really, because we were thinking about interest rates being pushed a bit lower, or I think there's virtually no chance of a 50 basis point hike. It's going to be 25. And I think the curve will also be, the expectations will just ripple out. I don't think they'll be raising anytime soon after that, or if they are, it'll be revised down. But I totally get the issue that inflation is just out of control. So something needs to subside. So in other words, this move up in oil, the move up in base metals, the move up, the cost push inflation that's coming through could actually have a dampening effect on the economy naturally. And therefore, inflation would then just sort of fall back a bit, and then, but perhaps not enough for their targets, and they will have to raise, but just by not as much as they're expecting. And as you rightly say, there's a lot of uncertainties out there about how the war's going to go and whether it's going to be over quickly or slowly, and the strategic moves that are being made. But as far as the markets go, as I say, the dollar looks like it's going to make potentially one more move up, and I think it's going to be once they announce the 25 basis point hike, you probably see a spike up, just because markets do contrary things on figures, and then we'll see a bigger correction. But looking at some of the other currencies, like the euro, is still under a lot of pressure, and it's probably heading for parity against the US dollar. The European stock markets, as you might expect, aren't doing very well, and agricultural prices are still very bid. And we talked about this way before the war was announced, but it just goes to show that from a technical point of view, there's people out there who know what's going on before we find out. And these unusual patterns in these soft commodities wasn't something where you could necessarily predict that there would be a war, but these things never happen quickly, and this is why, one of the reasons why I like technicals, because it tells you that there's something going on, even if you don't know exactly what it is. And then the market news comes out, and that's usually the end of the trend. So commodities still moving higher. We talked about wheat, soy futures, etc. They're all at or near multi-year highs, and pressing higher. Now we've got a couple that aren't moving up, and rice obviously still is, and that's heading towards its multi-year high there as well. And we've got sugar futures, which surprisingly haven't moved very much. And coffee, I thought that would go higher. It's starting to turn down. And cocoa's still stuck in the range. So not everything is moving. But the big news in the markets, as you probably heard, was the move in nickel. So if we look at the commodity markets, the base metal markets, which we've been very bullish on generally, this is copper futures, and copper is known as the metal with a PhD because it normally reflects the economy. But in times of crisis, like as we are now, I don't think you can read it in that way. But this is technically still very bullish. I think long term we're going to stay with a bullish view, but it has got overblown as it went into a new high and then came back down. Aluminium has been in an upward trend for some time. It's been really very bullish, but as you can see, the price action spiked and is coming back downwards again. Same for nickel, which was, we talked about a breakout, a triangular constriction breakout, which we put in the weekly document, which happened around here. Now, it doesn't mean that we were necessarily expecting a market to move up as much as this, but this is fairly typical for a parabolic move and actually a trend-ending move. So it's almost textbook in the way that it's blown out, made a new high. Then we get the memes that were going around. I don't know if you saw them, Manu, but people sent me these these pictures of athletes winning nickel, and it's like way above gold and all that sort of stuff. And that's usually the end of the trend, at least from a short-term perspective. And I remember the last time that happened, something like that happened. Well, there's been a few, but one of the most memorable ones was when the euro crisis, when the currencies were trying to get the criteria to form the euro. And the it was the Spanish peseta, the Italian lira, and one other. I think it may have been the Greek drachma. And it was those three currencies. And the joke was going around the foreign exchange markets that they were going to form their own currency called yours. And, yours is a foreign exchange term to say sell. And because those currencies were collapsing. So once you get like little stories like that, it's very often a good sign that the market's going to turn trend. And those trends did turn in terms of the currencies. But yeah, we've seen some amazing price action, but not all metals are moving the same way. So I think this makes it quite interesting. We could do a whole weekly on the metals themselves, but I do try to sprinkle them in as they look interesting. So lead futures, it's actually looking like a potential topping formation, and iron ore, which is a very important product, has been in an upward trend, but it's still way off its high. So, not everything is moving as aggressively as you might think. So I think that's worth keeping an eye on. The reason why I'm showing you this is because it's also very unusual for the dollar to be rallying and for metals to be rallying. So something needs to give one way or the other. I mean, of course, it's possible because it's happening now, but I do think that there'll be a reversal. I also think you'll see a reversal and an end to the conflict happening perhaps in the markets much quicker than you'll hear about it. And I'm quite sort of buoyed by the fact that these metals are coming down. It could mean that there's a resolution much sooner. I hope much sooner than the market is expecting or generally is expected. But I also hear your caution when you say that this could go on for a long time. So we are going to need resolution one way or the other before the market the market can deal with war if it's if it can deal with the certainty of it, if it knows that there's going to be a limited parameter to which Russia will invade, then it will deal with that, and then we will move on, and then it will probably rally. So you can have bad news. It's the uncertainty that the market really doesn't like. So gold and silver were standouts in terms of their rallies in the sense that for a long time we had the base metal rally, but we didn't have the precious metal rally. But the technical patterns were constricting in a massive triangle, which did mean that there would be a breakout to the upside. Now, I was a little cautious last week because when you see a spike and a reversal during the Gulf War, you saw spikes in commodities, and then during the invasion, everything turned down. And I thought we might see a similar thing. But if reversal patterns or spikes, if they're negated really fast. So you get a spike, you sometimes get that in a trend, and the market reverses so fast, i.e. it goes back up really quickly. You know there's going to be a big, if it eats into 50% of the spike, within a couple of days, it's going to break into a new high. So last week, literally on the Thursday, we'd seen the spike. So it's very difficult to know whether it was going to come back down and be heavy selling or whether it was going to continue back upwards. Now, I don't like to say 50-50, it's going to go up or go down. I like to give an opinion, but sometimes you are caught at a crossroads and you have to say, look, if it goes up, it's going to surge, but, just be careful. Now, long term, we've again talked about it many times on this show and in the documents that we like gold. I think gold's got a long way to go, especially in this inflationary environment. But I think a few people have thrown in the towel before this move happened, because basically, who would want to hold it in this range for such a long time unless you had long-term faith in it? But I was trying to finesse the last move, and perhaps I was just trying to be too clever for my own good. But there should be a correction here. I do think there will be a pullback and an opportunity to buy, but that opportunity may be one of the last we'll see before it goes into new all-time highs and way beyond. I also really like silver, and silver was pressing this resistance line, which I thought might hold. But again, if you look at the difference between silver and nickel, I would have thought nickel is less valuable than silver, and silver would already be up here. But no, it's still, it's broken out, but it's a good short-term trend. But in the big picture, it's not as bullish. So, short-term buy signals, great, but I really need to see something a bit more substantial from the long-term perspective. Now, again, it'd be impossible or very unlikely for gold to go up and silver not to go up at all. But silver should be trading around $30 at least, I would have thought, given where gold is. So despite that, I do think there will be a switch into silver, and that will be when there's a synchronized move in all the commodities moving up. So we'll look to buy on retracements. I do think actually staying either stable or looking to buy on this next pullback will be the strategy. So interesting that commodities or precious metals they're trying to push out these ranges, and it's confirming what we already know about the inflationary situation. Now, if we move over to the cryptocurrencies, again, it's kind of steady as you go here, because what we've got is we had this downward trend that was looking like potentially there would be this big topping formation that I wasn't buying into. I was trying to buy retracements here. We've got higher lows, so we've got some very important points in terms of support, but the rallies keep failing around some significant resistance. So we've got 45,000 as a really significant resistance point that it keeps failing every time it gets near it, which is very frustrating. So if it could get through that, then I think it would trade into the sort of 50,000 to maybe a bit more, and then come back down again, and then just range trade. But I'm happy with it just going sideways for now. As long as it goes sideways or consolidates, doesn't go lower, then I think the bullish scenario medium term can stay. Now, where I start to get concerned is if the market approaches this yellow support line. I don't want that to break. And it's more because of the way that Ethereum looks. It looks really heavy, and it's increasingly concerning me that it looks this heavy, because this could potentially be a symmetrical triangle, and a symmetrical triangle is normally a continuation pattern, which means that the market's going to break this low and test further downside. I think even if it does that, as long as it stays above its really important support from mid mid last year, as long as it holds over this 1728, so it could trade into here and then move back up again. We just don't want that level to break. That would be a really bad sign, but it hasn't done any of that yet. So triangles are normally continuation patterns, so that would mean this would be the trend, this would be the continuation down, but they are biased towards the downside, but we still need the trigger, and they can fail as well. So we're kind of at this crossroads where it's a bit of a tricky call. And I think on this occasion, I'm just going to let the market lead, the technicals, rather than just saying, look, the bias is to the downside, because Bitcoin looks more bullish, Ethereum looks more bearish. Which one do you go for? Which one is leading the other? And at the moment, it's really difficult to say. If we can stay within this range this week, it will be a very good sign. So I just want it to consolidate here and not necessarily go any lower. If it can do that, it will be a good sign. But yeah, so that's the summary on the technicals. Any final thoughts?
No, that's pretty much it. I think it's a bit of a wait and see. I think we're going to see this consolidate for a bit longer, and I think we'll get a very, very good bit of insight next week when we have the decision from the Fed. And if it is 25 basis points, as you and I both suspect, that is going to be very positive for crypto in the medium term, certainly. I think, because it lays a foundation for them coming back and actually being far more accommodative and actually printing more money. And the second they begin to expand their balance sheet is the second that we'll see the parabolic move begin.
Absolutely. Brilliant stuff. Well, thanks, Manu. Thanks for all your thoughts. And thank you so much for watching. And we will catch you next time.